I'm Ivan Fairhall, CEO of Mawson Gold, and welcome to the second in a series of videos to take investors through a little more detail on the PEA that we've just announced over our Rajapalot gold cobalt project in Finland. Before I get into it, I'll just pause on the disclaimers, and in particular that I'll be making forward-looking statements, and investors should exercise caution before making an investment decision. Now, I'm here primarily to talk about the PEA, which, as you're about to hear, is the foundational piece of the opportunity and investment case within Mawson. I'm very proud to announce that this PEA shows that Rajapalot is an asset of significant value to shareholders. Mawson owns 100% of this asset, and its European context is also very important. The mine would be significant in production, not just EU's sixth largest gold mine, but also its third largest cobalt mine, which is an important strategic metal, as we all know. There's also a lot more to find. At Rajapalot, we have down plunge exploration potential, as well as a very large regional opportunity, and we're really only just getting started there. We're also exploring in Sweden, and as a company, we have leverage to the fantastic discovery at Southern Cross Gold. That stake has strategic value, and that naturally arises from 60% of such a significant discovery, but also the absolute value of the stake and the potential funding and corporate optionality that comes from owning it. So I contrast all of those things, very strong asset base with our valuation. And I think this shows a very compelling investment proposition and positions Mawson very well for a re-rate. Coming back to the PEA more specifically, I'm very pleased to announce the results here today. The PEA unlocks the value that we have believed for a long time exists in Rajapalot. We have a US $211 million after-tax NPV at a discount rate of 5%. That's almost right on $1 per Mawson share today. The PEA outlines a very attractive all-in sustaining cost of $824 an ounce. We're able to produce gold at low cost, resulting in high margins and a robust 27% IRR on a capex of $191 million. And for that, you get a very meaningful asset in Europe. A full run rate of 92,000 ounces of gold equivalent from an underground mine, which makes the most of our resource. And there is a lot more to find here. This is just the beginning, and the PEA now gives us an opportunity, an economic platform to drive our exploration by putting a value on finding more over what we've already outlined here today. As I mentioned, the production profile outlined in the PEA makes Rajapalot a strategically important asset. On the left-hand side, I have there a graph of all the gold production in Europe. Rajapalot, if in production today, would be Europe's sixth largest gold mine. And it exists in a region, the Nordics, that dominates the single market in terms of EU gold production. Rajapalot would also be Europe's third largest cobalt mine. Finland as a country is extremely well placed for the cobalt transition. It dominates the EU's resource base, its production base, and also its downstream processing. We all know that cobalt is critical for the global electrification efforts, and Rajapalot has the potential to deliver ethically sourced cobalt into the EU's stated strategy for self-sufficiency and the circular economy. The next three slides take you through the numbers that make up the PEA, starting with what it would look like as a mine. There's a lot of numbers and I'm not going to go through them all, but there is going to be a separate video on the website taking you through a little bit more information. The mine itself would be a 9-year underground operation, producing gold and cobalt with a plant feed rate of about 1.2 million tonnes per year. Just going to draw your attention to a couple of numbers here that are important points. 85% of the ounces that are in the resource make it into the mine plan. The deposit is robust and it's holding up well to mining. We have 95% gold recoveries and are producing gold at a rate of about 82,000 ounces a year. It's simple metallurgically, free gold, and so we have no high cost or energy intensive refractory ore. We have also the all-important cobalt production at over 300 tonnes a year of cobalt in concentrate for a simple back-end flotation step of the cobalt-rich parts of the deposit. This is a low-cost operation at about $57 a tonne, which is driven by productive mining conditions, long-hole open stoping, access to low-cost renewable power from the grid, and a relatively cheap but productive labour force who live close by. When you combine those low site costs with great recoveries, that's what drives the very low C1 and the important all-in sustaining cost of about $824 an ounce, which is about a 50% margin on today's gold price. Capital-wise, I firmly believe we've been realistic with the capital numbers. There really is nothing fancy about this project. Conventional plant with simple infrastructure, but it is a new operation and we have accounted for everything that is required, and we've done so at today's inflated cost base. When you lay that CapEx and OpEx over the production schedule, you end up with a project that generates cash. An after-tax NPV of $211 million at 5% discount rate. There's about $338 million of free cash flow in the first 5 years. Those robust cash flows, I think, will support a future project financing, particularly given the attractiveness of the Tier 1 Finland location. Within the cash flows, I think it's also worth pointing out that there's over $100 million in life of mine cobalt revenues. Cobalt is very much in physical demand, and I see the potential for very attractive streaming type financing opportunities, which just adds to the optionality of the project. These cash flows also give us the opportunity to reiterate the upside scenarios that we've been discussing. Through exploration, we will look to add more ounces, and this could really talk the NPV. I think people should run their own scenarios on that type of thing, but a risk-adjusted return on drilling investment is now certainly something that is much more attractive to the company. This slide just shows some basic project sensitivities. I think the key takeaways here are from the first column there. We've got very attractive free cash flows. Mining is about making money, and our high margins protect the business during periods of low gold prices. It really gives it robustness through the cycle. On the flip side, we have solid leverage to the upside. We have an NPV increase of over 50% for an 18% increase in the gold price. I don't need to remind people that the gold was above 2,000 level only just 6 months ago. And lastly, just to reiterate my earlier point, that the PEA marks the start and not the end for Rajapalot. There is a lot more to find. Mine life extensions through drilling down dip, where we have open mineralisation. For example, the deepest hole in Rajapalot is 31 metres at 5.1 grams a tonne gold equivalent. That's only 553 metres deep. Given the continuity that we've observed to date, it's been very good, and we believe the prospects, therefore, of resource growth down dip are very good. Stepping back, we're only just starting. We've got a large land package with a significant mineralisation footprint that's already been demonstrated across it. Overwhelmingly, the majority of the property has not been drilled. And so we have many more targets to test in the search for the next deposit. And given the distances and grades that we've seen elsewhere, we'd certainly expect that to be truckable to the sort of facility that we've outlined with the PEA here. In terms of next steps, I think importantly, we have just demonstrated here that we have an asset of significant potential, and a very important outcome of the PEA is that we have an economic model to understand the value of finding more. Adding ounces, like I mentioned, will talk the NPV, and the case to continue to explore is as strong as it's ever been. At the project level, we will continue through the important optimisation and de-risking work, tightening up the basis of design and the project scope to lower project risk and increase confidence. In parallel, we'll continue to advance the permitting process that we've already started. The PEA unlocks the next step in that process, and alongside our supportive stakeholders in Finland, we're going to do the necessary work required to get the permits that you need to mine this valuable deposit. So thank you to Mawson shareholders for your support to get Mawson to this important milestone. It's an exciting time for the company, and I believe it positions us very well for the future. Thank you all for your attention, and bye for now.